Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on natural gas again. So after yesterday and the bearish inventory report reaction, we saw a break of the higher low pattern, which shifts our mindset to start looking for lower highs and lower lows. That ended up playing out with another dump today to the downside, and we got oversold on the hourly time frame, so a short-term hourly oversold bounce is likely, but we have multiple inside bars to be watching on the hourly time frame once we start trading on Sunday, and on the daily time frame, we have very clearly now rejected and formed a lower high. So the resistances, again, 312.7, 312.2, and 311.4, and it's all about 2928, and we hit 2938. We came very close. If we break through that level, that is a big setback for the bulls. The bulls already have their backs against the wall, and this is really the only hope that they are relying on, the fact that that higher low is there and giving the bulls a shot at forming a higher low. But if that were to break, that would have us looking back down to 2832 as the next support. So the weekly time frame, very much keeping the bears in control. Look at those upper wicks. That's profit taking pretty much 2 months in a row almost. And no follow through for the bulls, no momentum, no conviction to the upside. Look at the breakout we had. All these breakouts all have one thing in common. Closes near the highs of the week, looking for continuation. And we do not have that at all. We have bearish action and a close near the low of the week, close near the lows. So bottom line, bears are in full control of natural gas, and they're in full control of oil as well. And the notable thing about this is the dollar is extremely weak. We are in the most oversold weekly RSI levels in 6 years. So if the dollar begins to see an oversold bounce and get some strength behind it, you got to figure, okay, normally there's an inverse correlation where dollar weakness would lead to strength in these commodities. We're not seeing that. So if we see some dollar strength, are we going to see further weakness in the commodities? That remains to be seen. We're going to have to keep an eye out for that. But the bottom line is oil, natural gas, and the energy sector is showing a lot of weakness. So UNG pulling back, rejecting with a lower high, 698 and 695 now. And we did break to a lower low here. So although it did not happen on that natural gas futures contract, it did happen on UNG. That 660 level did break. We dropped down to 657. So that is a big setback. Look at all the volume behind this. The bears are in full control again. And the weekly time frame is rejecting from exponential resistance now, 1 month in a row. If we can't get over exponential resistance, the bulls have no hope. And the bears remain in full control. So that is currently where we stand on natural gas heading into next week. Again, short-term hourly oversold bounce could happen to start Sunday when we begin trading, but overall we will look for this lower high and lower low pattern to continue. At this point, the bulls would have to get over 3044 to change this hourly lower high pattern, which is now following through after our top on the fake out reaction to the inventory report took place. So that's what we've got. I appreciate you watching. Have a great rest of your weekend, and we'll see you soon.